2024 real estate predictions. I'm going to predict home prices, rent prices, interest rates, and the CPI 1 year from now. So I'm asking you all to challenge me. I'm asking you all to put what you think is going to happen in 12 months from now. And for some of you, I may even reach out to you personally. So where are we today? Right now, in December of 2023, the Fed inflation target is 2%. It's been this way from the beginning. As you know, we peaked of 9.1% back in June of 2022. Currently, the CPI is somewhere just over 3%, so the Fed's getting close. Interest rates are about 7.24%. They were as high as 8% recently, so they're down a bit. The cost to buy a single-family home all in, on the average, is about $3,200 a month, and rent, as of December of 2023, was sitting at about $1,847. That's where we are today. The real question is, where are we going to be in 1 year from now? So now let's take a look at the chart. The red line indicates the cost each month to rent. The blue line, of course, represents the cost to buy. As you can see, this chart starts in 1970 and ends current day. Rent has steadily climbed, but as you can see from 2022, it actually spiked a little higher than the normal average. The cost to buy, of course, has been all over the map because there's many factors included. One, of course, being the price of a home, and two, of course, being the interest rate. So pay attention to the blue shades. As you can see, these are the boom and busts of the housing markets over the years. What I really want you to look at is the disparity between what it costs to buy versus what it costs to rent. That's the most important thing. In 2021, home prices spiked as millennials entered their prime home buying age during a period of ultra-low mortgage rates. This sent home prices skyrocketing. Then, of course, the Fed increased the federal funds rate 11 times. So what does this all mean? What this means is that currently today, there's a 52% difference between the cost to buy versus the cost to rent. It's never been this high before. What this chart does not represent are the costs for property tax, for insurance, for utilities, for maintenance, and those kinds of things. So the monthly cost to own a home is actually significantly higher. Of course, you don't have those costs when you're renting, but those are serious costs. So my first prediction, which is contrary to what most people are saying, I believe that home prices are going to go up slightly in 2024. The reason I believe that is because of the chart. If you follow the monthly supply of homes in the U.S., you will see that it's dwindled significantly as compared to the historical averages. So what we have here is a supply problem. So the real question that you need to ask yourself is what drives prices up, not what drives prices down. Cost of construction drives prices up. Interest rates drive prices up. Low supply, as I'm showing you here, drives prices up. And high demand drives prices up. And the reason you have high demand is because there's low supply. So my prediction for 2024 is that housing prices will not drop. They'll actually maintain or slightly increase as a result of all those things. Currently, the median price of a home is about $420,000. But as many of you know, we're anywhere between 4 and 5 million housing units short just to meet demand. High demand, low supply, increase in prices. So what factors make prices go down? Not lower interest rates. Lower interest rates actually create asset bubbles. So what is the Fed supposed to do when housing prices are going up and interest rates are going up? This is the quandary that they're in. So what makes prices go down? Supply. But there's a lag with supply. Even if people start to build, which they're not, we're going to have a lag. 2024 and 2025 are actually going to be even worse. So now let's talk about interest rates. For all of you who think interest rates are going down, what are they? 8, 7, 6, 5? It might be interesting to know that over 82% of all people have mortgage rates right now under 5%. So what's the motivation for them to move unless rates come down 3, 4%? And that's not happening in 2024. So now let's look at rents. Currently, rents are about $1,847 on the app. Rents, in my prediction, are also going to go up. Keep in mind, the cost to buy is 52% higher than it is right now for the cost to rent. That's a historical all-time high. This is going to push more and more people into the renter category, and people are going to have to rent by choice. The combination of high building costs and high interest rates make building unaffordable. What we need right now is affordable housing, and what we have is an affordable housing crisis. Oh, and let's don't forget, if somebody was to jump from renter to homeowner, they're also going to have property taxes, insurance, utilities, and all of those things. So the gap between renting and owning has never been wider and is only going to get worse. So now let's talk about interest rates. Everybody wants interest rates to go down. We've already discussed that it's now more economical to rent than to buy in nearly all of the major U.S. markets. My prediction is that interest rates are going to go up slightly, stay neutral, and then go down right around election time. Because politically, high interest rates is not good. It might interest you that shelter drives over half of the headline CPI or Consumer Price Index increases. This shows you where shelter sits as it relates to the CPI. What I just showed you is that I predict that home prices are skyrocketing and rent is also going to skyrocket for all the reasons already mentioned. That's going to be a problem for the Fed, and the Fed's ability to address rising housing costs is limited as shelter cost increases are driven by a lack of affordable supply and increasing development costs, which the Fed is not in control of. So inflation is going to continue to push higher, and the Fed is going to have to use interest rates to tamper it down. So my predictions for December of 2024, and I challenge you all, the Fed's inflation target of 2% is not going to change. The CPI is going to be reported still somewhere between 3 and 4%, but it's going to stay high because food costs and shelter is going to be the Fed's biggest problem. And because the CPI costs are going to be a problem through all of 2024, the Fed is not going to be able to lower interest rates like everybody wants. I believe they're going to lower a little bit as we lead into the election year. However, it's not going to be meaningful because the home prices are not going to go down. Therefore, the mortgage payment, which includes property tax, insurance, utilities, and all those other things, is going to stay at least at $3,200 plus, and rents are going to climb continually because of lack of supply, which we've already discussed, and the gap between renting and buying is still going to be at an all-time high 1 year from today.